Are you one of those people who are looking for an income without having to worry about capital appreciation? So you have your money and you just want to invest your money, but what you're looking for is more of a monthly income. So if you're one of those people, you're looking for a perfect stock. Today, I have a perfect fund for you that you can invest your money and you can get monthly income or monthly dividends. Um, if it's your first time on this channel, this is Money Mind. I talk about money and investing, and anything related to your personal finance. So if it's your first time, just make sure you subscribe. If you like this video, please like it. So let me take you to the fund that it's perfect fund for you for today. So this fund right here, you can see Dividend 15 Split, headquarters in Canada, founded in 2004. We can see the chart here. That market today was almost 0.5%. It went down. A year from now is up. Look at max. When you look at the max chart, is way down where it was before, about 13. So it's about 50% down since the date it was incepted. We look at market cap. So market capitalization, how much the fund has. It's a 477 million. So about 77 million, 477. Previous close was 733. 52-week high was 790. So that means if you buy today or this price of 730, you have about 60 cents more to go. So that's a quite big of chunk of money. It's capital appreciation, per se, which it does go between that time usually. If we look at the dividend yield, because right now the goal here on this video is to see how much you can generate with this fund. So you can make about 17%. So 17%, that's, let's do calculation here. So let's say you have $100,000. You buy share at, so divide by 730. Let's do that. You get about 13,698 share. Those divide times dividend that they pay, 10 cents. You'll be getting about 1,369 per month. That's a quite big of good income you can have. Let's go deeper into the fund website. So it's called Dividend 15 Split Corp and is managed by Quadravest, and this is a company out of Toronto. Overview: Dividend 15 Split is an investment corporation designed to pay monthly cash dividend. The corporation invested primarily in a portfolio of 15 dividend yielding high quality Canadian companies. Two types of shares are available. There's a Class A, DFN, and preferred share, which is DFN .PR.A. That's a ticker symbol. So, and the reason why they call it Dividend 15 Split is because it's split between A share and preferred share to make it as one unit. They make it to be one net asset value. So core, and we'll see why that net asset value is important a little bit later on. You can see the core holding of this fund is Bank of Montreal, Bank of Nova Scotia, Bell Telecommunication, CA Financial, CIBC, Enbridge, Manulife Financial, National Bank of Canada, Royal Bank, Sun Life Financial, TELUS Corporation, Thomson Reuters Corporation, that's a big media company, Toronto Dominion Bank, TransAlta Corporation, that's energy company. It's a huge gas transportation and oil. TC Energy as well is also one of the giant energy company. That both of these pay really good dividends. Objective of this, it says preferred share, to provide holder of the preferred share with a fixed cumulative preferential monthly cash dividend. It's a preferential because when you own a share, preferred share, you prefer is more like a bond. So that means in case of company, for example, goes bankrupt or anything like that, usually you are the first one to get the money before the person who owns common shares. That's why it is a preferred share. But the downside of preferred shares, because it's more of a secured, that means you don't make as much in terms of income. You can see here the income of preferred share is only 4 cents, right? Versus Class A share, which it says is to provide holder of Class A share with a regular monthly cash dividend initially targeted to be 10 cents per share. So with A share you get 10 cents, with preferred share you get 4 cents. And the reason is because preferred share, you are more like a bond holder. You are given preferential just in case anything goes south. You are the first one to get the money back first. So for most of people watching this video, or if you're watching this video, most likely you are interested with this Class A share, which so on or about the termination date, because this fund has termination date, and the termination date meaning it come to terminate, it come to a time where they have to kind of renew the agreement with regulators, right? Because it's a fund, is regulated. So any other company that it has regulations, and then there's a date they set up, and that date will come on December 1st, 2024. So about 3 years from now, subject to further 5 years extension thereafter. So they renew every 5 years. So that means in 24 they're gonna negotiate, or they're gonna change their paperwork, and will be extended to another 5 years. And then, as I say, Class A is monthly cash dividend of 120 per share targeted annually. So in a year will be 120, and if you divide 120, of course, $1.20 times 12, divide by 12, that will get you 10 cents. Quality investment and diversification. You can see here, of course, is one of the biggest company in Canada. These are the bigger companies. I don't think any of these companies will go bankrupt anytime soon. So they're huge. Bank of Montreal, Bank of Nova Scotia, more safer company. The fund structure itself, might have some question to you, might have to dig deeper, but in terms of the underlying company that they invest in, they're pretty secure companies. Leverage to performance of high quality stocks, capital appreciation potential, attractive alternative to other income vehicles. So this is the thing, because they invest in this one, but we'll see one of the other strategy is to use leverage. So they do things like a covered call, which is options, derivatives, to generate more income just in case they fall short of dividends. So they do those other strategies to make sure you get your monthly income. And we come here to valuation, because we've already gone through the holdings. So February 26, 2021, net asset value pre-contribution is 16. So this is very important, because on the fund prospectus, it states in one of the documents I'm going to show you, or I can show you right now, one of these documents right here. If you go in this document, they state that when fund becomes below the net asset value, as I said earlier, net asset value is Class A share and preferred share combined. It makes total net asset value of 16 at this moment. But if that net asset value fall below $15, so let's say it's $14.90, then that monthly distribution for Class A share is not contributed, so you won't receive your dividends. And we'll see how many that happened actually. How many times it did happen that they did not pay dividend. We'll see in a little bit. Distribution, of course, is 14 cents, which is 10 cents A share and 4 cents preferred share. Net asset value net of distribution is 1611, so it's a little below the actually net asset value distribution itself, or net asset value distribution itself. So that's kind of good. Net asset value plus total distribution paid to date, like since inception in 2004, it's a 48 and 44 cents per share. So that's a pretty good. So we'll come here and we'll see, of course, those are the stocks and there's a description of the fund itself. So total net asset value at this moment, that's how much it is. Inception date was March 16, 2004. Termination date is December 1st, 2024. Net asset value is 16 at this moment, so it's pretty good, because when it's below 15, then you won't get your dividend. But now, because it's over 16, it's a pretty good. Cash waiting at this moment right now, they have 12% of the fund of this much is on cash right now, because the market is so rich right now. So maybe they're just holding, the managers of this fund, because you understand this is an active fund, right? So they might be holding some cash just to make sure if the market they can see opportunity of stocks to buy or anything like that, they can use the cash, right? Canadian equity weighting is about 88% of the whole holding is from Canada, because there's some company like sometimes, of course, they do have, you know, they'll do have that derivative or covered call, other maybe other security, but that's what they say. It's 88%. It's Canadian stocks. You can see on the graph here, invest in core holdings. The yellow, invest in non-core holding. As I say, they do other strategy which is non-core, apart from these 15 stock right here. It's about that little gray, and the blue right now is cash. So they holding a lot of cash right now, which is, it can be good, it cannot be good, but you know, that's their strategy. We'll just track their track record of dividend, because what we care more on from this fund is dividends, you know, because most people invest in this, they care about dividend, not capital appreciation. So as long as they can pay us a dividend, it doesn't matter if they hold cash, they don't hold cash, we don't care, right? Let's look at distribution history. Look at that. They start paying dividend from 2004, as I say, and since then they've been paying all the time, all this time. For example, they miss, they pay, this is called special distribution, so you get 25 cents rather than 10 cents. You know, this September 05, they pay actually regular dividend and also preferred or special dividend. So it was pretty good that month. So they've been paying from 20, they never missed a dividend from that time all the way. You can see here, this is a history. I'll give you a link to the website, you can go and see for yourself. Look at that. They never missed, they never missed, they never missed. In 2008, let's go back here in 2008 when the market crashed. Because if you want to know the strong funds or strong dividend payer, you go in during market crash, you see, did they pay dividend or did they fail to pay? In 2008, they paid every single month for 12 months straight. They never missed in 2008. Go all the way. So they never missed, they never missed, they never missed. Pay all the way through. You can see here. Every month they pay you 10 cents. You know, subject to how many share you're holding, right? We come here, we'll see, so this is the only time that they missed was the highest time that they missed was 2020 coronavirus crash. So they paid in January of 2020 and February, and then March, April and May they stopped, they didn't pay. And because the net asset value, as they say, was below 15 at that time, and if it's below 15 they don't pay. And then they resume paying June, July, August, September, October. Net asset value went under 15, they didn't pay. So 2020, since this fund was established, the 2020 was the hardest year of all. You know, there's only one more time, I think in 2014 they didn't pay one time. So altogether, you can see they have a track record of paying dividend, which is a pretty good on our Class A share. Now they've been paying, of course, since since November. So hopefully it's continue. Of course, they will pay right now because his NAV is more than 15. And if you want to know more, dig deeper into this fund, you can go to documents, funds documents. So you'd come to the website product 15, dividend 15, and you'd come down there. They're going to give you this chart. You go to fund documents and you can dig deep on these documents. Original prospectus. There is tax information, preferred share, tax information, A share, quarterly portfolio disclosure. There is latest semi-annual report, annual report, and annual information. So that's all you need to know for now. You can come here if you're really interested and dig deeper for yourself. There you have it, and that's how you can generate 1,300, and that's how you can generate 17% annually from dividends. And if you're interested, you don't care too much about, as I say, about capital appreciation, you want a fund that pays you, and maybe you can reinvest you can invest the money, or you want to take that money and use it, and that's a fund for you. That's a perfect one. It's 17%, and then they have a track record from 2014 up to now. When I look at that record, it's a pretty good. So if you're really interested in this fund, just go on their website. I'm going to put a link below and dig deeper, read all the tax information for yourself so you can know if it's a perfect fund. And also, don't hesitate, you can always call them. I have actually called them, and you can, customer relation or investors relation, you can call them and you can speak to them. They can explain to you, manager of the funds who manages fund. You can have all the questions, you can ask all the questions. That's easy way to do it. I personally prefer to do that way because you get the answer from the person who manage the fund themselves, right? So rather than just reading on website. So if it's your first time on this channel, please subscribe, and if you have any question, just make sure you comment below, and don't forget to like this video. Till we meet again, thank you for watching. Bye bye.